Hey guys, I hope you're all doing well. Today we have to talk about Dropbox, okay? And something very, very interesting is happening, and I believe this stock could go up and it could go up fast, okay? Generally, Wall Street has been ignoring this stock just because it hasn't been increasing in revenue as much as they would have liked Dropbox to increase in revenue, but recently we can see there's been a huge upward move in Dropbox. Just over the past month, it's up by 18%. We can see it's up after hours 8%. And the reason for this move is, of course, there's talk that larger companies are going to acquire Dropbox. Okay, so recently we found out of a huge deal between, of course, Salesforce and Slack. I own a couple of Slack shares, and so I'm going to be the beneficiary of Salesforce acquiring Slack in a $27.7 billion deal. Okay, so now there's talk that Dropbox and other smaller companies are going to be acquired by bigger companies. And generally, what happens is the larger companies, their share price decreases short term, and the smaller companies, the company that's going to get acquired, their share price increases, okay? Because generally, you have to pay a premium to buy the smaller companies, all right? So, in the wake of Salesforce acquisition of Slack, the information staff sat down and brainstormed the likely next acquisition targets in the enterprise software space. Okay, they named Dropbox, Box, and Bongo as a takeover targets. And because I own shares in Dropbox, we can see right here, Dropbox, I have 40 shares um, at an average cost basis of $20.37. Right now they're $22, but that's not even taking into account after hours where they're up $24. And I'm up 10%, which only represents an $84 gain. But I honestly might be looking to add to my position. Usually I only add to my position if I'm down. That's called dollar cost averaging. But I might need to add to Dropbox because I believe it has very, very interesting potential to be acquired. And we saw what happened with Slack when they were acquired by Salesforce. Their stock jumped by like 30%, okay, on the news, okay? And even a smaller company, we can see right now, has a $9.3 billion market cap. This stock would jump tremendously, okay? And again, like I said, a lot of Wall Street investors are sleeping on this stock, all right? And the main reason for this is, I have a little note here. So first off, we have to talk about total addressable market, or TAM. For the cloud, it's going to be $46 billion, okay? In 2019, that's what it was. The TAM for 2027 is $222 billion, okay? So although right now, so this space is growing tremendously year over year, okay? And of course, the pandemic only helped that transition. Right now, Dropbox has about a 22% market share in the cloud storage space. However, they're projected to continue to lose market share from 22 to 20%, okay? But the reason that I'm not concerned about this is because the total addressable market is going to grow so much that even though that they lose market share, they're still going to grow revenues because the total addressable market is going to, more than 5x over the next couple of years, okay? So not only do I like this Dropbox as um, a company involved in the cloud storage space, they also have HelloSign that they acquired, which is a whole other business, with e-signatures. I just like Dropbox in general, but I think the added potential of Dropbox to be acquired by a bigger company is going to be the cherry on top, okay? And I mean, these integrations are happening left and right. And so first, before we get into the potential acquisition and the details of that, I want to talk about what Dropbox is. So, of course, as a cloud, mainly as a cloud storage, so backup and sync, file sharing, and again, sharing folders. They're also working on something called like a smart workspace, I guess, sort of something like a Slack, um, content management, collaborative apps, etc., etc. Again, e-signature could be a huge one. Again, they acquired in about like a $207 million deal. They acquired an e-signature company. Um, so that's going to, again, add to their revenue, personal privacy, content backup, and again, so everything that you're looking for in the cloud storage space, you can find in Dropbox, okay? Um, and if we're looking at their quarterly results, we can see again from 2019 to 2020, they increased their revenue from 428 million to 487 million. And I mean, this seems impressive, but again, this revenue growth is slowing, okay? And they made an 8-cent profit in the previous quarter, okay? And again, if we're looking at their assets versus liabilities, you can see right here, they're very cash heavy at $452 million, whereas their current liabilities are almost non-existent compared to this massive cash position plus short-term investments, right? Which is huge, okay? So I'm not worried that Dropbox is going to go under anytime soon, okay? Again, the concerning thing here, is of course sales growth. We can see for the current year, it's projected to be 15%. Next year, it's projected to only be 10% revenue growth. Okay, so still double digit, still quite impressive. But again, it's slowing growth. Okay, and I believe in 2019, their revenue growth was about 16%. So this decreasing trend is what's concerning most Wall Street investors. Okay, and that's why this company is trading at a relatively cheap valuation. Okay, however, if we're looking at their earnings per share history, we can see that in 2019, they had 14 cents a share, 2020, 14 cents a share again. The next quarter, second quarter, 17 cents a share and 18 cents per share. And they always beat analyst expectations. Okay, again by like here by 44%, which is really really nice. Okay, so I'm not worried about their revenue stream, and unlike other software companies like Snowflake that actually shot up tremendously, but their revenues were in negative territory, Dropbox is actually a profitable business. Okay, and again, just looking into some stats real quick, we can see this company is not highly shorted, um, which to me is a good sign, especially since people who short companies necessarily tend to do more due diligence than investors who just buy shares of the company, because um, shorters have more to lose if the stock price goes up than people who buy regular shares have to lose if the stock price goes to zero. Okay. And so I'm really considering putting more money in Dropbox because of its potential acquisition. And we can see just based off of the potential news that there's going to be acquisition, this stock shot up by 8%. Okay. And I mean, I'm not going to say it's easy money to put in money in Dropbox right now in hopes for a potential acquisition, but I do think that regardless, if you put in uh, some money in Dropbox, even at this price, I think this will be profitable for you in the future, just because the statistics all value Dropbox in a pretty cheap way. Okay, Wall Street is definitely sleeping on this one, in my opinion. Okay, so yeah, that's all I have for you today. I mean, again, just look at their forward P, 23.7. All right, and if you're looking at a company with a forward P that's in the software space at 23.7, I don't think you can name another one in that space. All right, so I do believe that this company has really good potential, especially if there's considering talks of being bought out by a larger company. All right, so that's all what I have for you today. Again, check out the links below in the description. And feel free to subscribe if you haven't already, and smash the thumbs up button. It always supports the channel. And I'll see you in the next one.